In this video, I will walk you through the analysis of a property investment in Canggu, Bali. The object is a newly built 2-bedroom villa with a 25-year leasehold. The idea is to rent it out as a short-term rental, so not to flip it in a few years. And in this analysis, I want to evaluate if that's a good investment. If it turns out to be a good investment, it is still an option to flip it after a couple of years. But of course, it's easier to sell a good running business than a poorly running business. Now, brief disclaimer, this is not meant to be investment advice, but it should give you some guidance on some ideas how to evaluate an investment. In order to make a decision, you need to evaluate your personal situation as well, your net worth, your ability to deal with risk, and of course, all the other legal and tax factors that cannot be discussed on a generic level. Let's look into the object and compare it with a couple of relevant benchmarks. So here we are in Indonesia, and Bali is a central island right next to Java, the main island of Indonesia. And we see it's a fairly large island. Tourism-wise, there are three main areas. In the south, you have Uluwatu. You have Ubud as the cultural center, spiritual center for yoga and similar in the jungle. Of course, you have no beach there. And the most popular area is down here, going to the northwest from Kuta and Denpasar, the main city areas, and slowly moving towards northwest from Seminyak, Kuta, Seminyak, and these days, Canggu is the most popular area. And roughly in this area is where the villa will be. So we see on the satellite image, it's all fairly green, but a lot of construction has happened in this area in the last year. We see a lot of villas have been constructed here, not that many hotels. We see restaurants along the major streets. We see supermarkets have come up. Nevertheless, there's still a lot of green left, and there are more villas being constructed in the empty land. I do not have the precise location of the villa, but it's somewhere in this area. And that means it's not really walkable distance to the beach. It's fairly easy to get there on a scooter. And it would take maybe 5 to 10 minutes on a scooter. In this area or further inland, you need a scooter to get around. You need a scooter to get to the beach. So I would consider this a very good area. However, of course, not quite as good as closer to the beach, where you can walk to the beach. It's fairly quick to get there. However, you do need a scooter. So I would give that 8 or 9 points from 10, because you will have a couple of restaurants nearby, but not that many. Mostly you will use a scooter to get around, but it will be very fast to get pretty much anywhere. Let's look at the details of the object. It is a 2-bedroom off-plan villa with a 25-year leasehold period, expiring in 2048. It comes fully furnished on a 100 square meter piece of land, and the building has an area of 165 square meter. So the 100 square meter land size are fairly standard in this area for very small villas. The 165 building size is above average. It comes fully furnished and has a very small private pool. The features are fairly normal for this area, so Wi-Fi with fiber optic, a TV, dining room, air condition, kitchen, and a small workspace to use your laptop. The layout is not too unusual for this area. When you enter it from the street, you're in a small garden area with a very small pool. It's more a plunge pool, not really for swimming, but very nice to cool yourself off on a hot day in Canggu. Then on the ground floor, you see 1 bedroom, the kitchen, dining area, a sunken seating area with a TV, and you have stairs leading to the upper floor where you have another bedroom and another bathroom. And you have a second flight of stairs to the rooftop where you have a nice little covered seating area. I would point that one out as a special feature, which is somewhat unusual in this area. And on the floor plan, we see how we have 2 bedrooms stacked on top of each other, 2 bathrooms, so all this fairly identical. Seating area, living room, downstairs. So it does not offer a lot of space, but all the amenities and privacy that you need to have a nice vacation in Canggu. Let's have a look at the competition we can expect in the Airbnb or short-term rental market. So here again, the same area we just looked at. Zoom in a bit closer. I filter for an accommodation for 4 guests and I set entire home because we compare with other villas. 2 bedroom, 2 bathroom, and Wi-Fi, pool, air conditioning and a kitchen. So let's see what there is as competition in the area we're looking at around here. This one actually looks very similar. It's a 3-bedroom though. Let's have a quick look at that one. So style is very similar, location is very similar, just slightly larger. Looks very nice, looks very new. The pool is larger, everything is larger. So I'd guess if we could charge half as much, we could probably be happy. It's fairly new on the market and is not fully booked yet. However, even though it's fairly new, a lot of bookings in the high season, and I'm sure the rates are quite high here. Let's have a look at a couple similar objects. Also similar, 3-bedroom, similar style. Not quite as elaborate, but still very nice. And the rates seem somewhat lower. Oh, and this is also very new on the market with only 2 reviews available. Now here we have an actual 2-bedroom, not too far away, but in technically a different area behind this river. Let's have a quick look for comparison. So it's smaller, different style, but it's not so much the style that dictates the price or the occupancy rate. And with that, it's actually more relevant, more similar to what we are looking at. So a very small pool, nevertheless larger than what we are looking at. And also looking similarly nice, I guess. The rates are in high season $200 a night, and it's very much mostly available. That makes me assume that it's actually a pool booking, so that there are multiple units of this type. So you cannot really derive the occupancy from this chart. Now here another 2-bedroom villa, similar, different style, but similar size. Larger pool though, but not as nicely done up. So only $123 a night, and occupancy also not visible. They only make it available for booking for the upcoming few months, July, August, September, so for 3 months ahead. So you see it's not easy to find something that is directly comparable. This one looks nice and similar. So it's a villa, 2-bedroom, 2.5 bath, small pool, very similar. Everything a bit small, as we can expect from the object we are looking at. It's nice, also with a sunken seating area. This might be the most similar object, and we see here 155 a night. In the high season, the last gaps in the high season, quite a good occupancy here. It's just a few days, less than a week left in the next month, and not much more, 2 weeks in August. So looks like a 80% occupancy rate roughly in the high season, and too early to say in later months. And that at a rate of $155. And as we do not have any reviews, it must be very, very new. Now let's have a last look at this one. Also 2-bedroom, not exactly in that area, but not too far. It's already very long on the market. Not super fancy, but quite cozy. They call it minimalist modern. So let's have a look. The rates here are 143 and it's well booked. For July, it's only 3 nights left, so that gives it a 90% occupancy rate. August looks a bit better, or worse if you're the landlord. Booked pretty well. I'd say it will rent out between 70 and 80%. And the rates in August, let's check a bit more, goes down to $130. So to sum up the peer comparison in that area, my impression is there are very few 2-bedroom units, a lot more 3-bedroom or even larger, and then it gets expensive. And for an occupancy rate, I think between 70 and 80% is a reasonable expectation. The rates vary a lot and can be between 130 and 220. So I guess for a nice interior design in a modern new villa, you can probably average between $180 and $200. So in terms of assumptions, I would probably go with, let's say, $175 as an average daily rate and 75% occupancy rate across the entire year. So let me walk you through the calculations. The property is offered with a 25-year leasehold duration, and it costs about $220,000. So that comes down to $195,000 for construction, 25 times 1,000 for the leasehold cost. So we are at $220,000. Now, for calculation purposes, I assume 5% interest rate for borrowing, but also for investing money. So I finance the whole $220,000 with 5%, and all the money that I get in terms of rental profits, I use to pay down that balance. And once that balance is gone, I keep investing, and I also receive 5% interest rate on my investments. So this is only to better compare this investment with other benchmark investments. In terms of revenue, I assume a 75% occupancy rate, an average daily rate of $175, and an expense ratio of 50%. Now the expense ratio covers things like a platform fee for Airbnb or Booking.com or Agoda, as well as villa management, things like electricity, water, minor repairs, keeping the pool clean, Wi-Fi, anything you can imagine. It also includes taxes on the revenue, but not taxes on the profit. So that depends on the individual circumstances and lowers the operating profit a bit further. The taxes on the profit depend a lot on your individual circumstances, And when we compare it with other investment types like government bonds, we also have taxes on those profits or those revenues we get there. So I keep these taxes out to keep it simple. An occupancy rate of 75% is realistic. We can have more, of course. Anything 90% and above, I don't think is realistic. You will always have some maintenance or something. Would be extremely lucky to get that more than on individual month. Can happen, but I would not calculate with that. You can also have a best case scenario where you assume 90% and maybe $200 average daily rate. But I feel fairly comfortable with 75% occupancy rate, $175 average daily rate, and an expense ratio of 50%. So that comes to an operating profit of around $24,000 $2,000 a month on a $220,000 investment. Sounds not too bad on a first look. But let's have a closer look on how that actually looks like. So I have a row of numbers for 25 years. So I start with paying $220,000 and then I can rent out the property immediately for the duration of 25 years of my leasehold. So 1 year later, I calculate the 5% interest on my balance and I add the annual profit of about $24,000. The next year, the interest on the balance is again 5%, but as the balance is lower, the interest payment gets lower. The next year, I pay again 5% on the reduced balance and also add $24,000 from the profit. So I continue the row exactly like that. And after about 13 years, I have paid off my mortgage balance and my balance gets positive in the bank account. So from that on, I only add the $24,000 and also accrue a positive interest on my balance. After 25 years, I end up with close to $400,000 in that bank account. Now, all this does not take into account any inflation. So what you see in the right column is basically the same calculation. However, you see it deviates from year 2 already. So in the first year, we have the interest payment and the profit. However, already in the second year, we add more profit as we assume that the inflation rate allows us to charge higher daily rates. So we apply the 3% inflation to the $175 of average daily rate. And going forward, every year we increase the daily rate by the inflation rate of 3%. So with the inflation rate of 3%, we already achieve break even and pay off the balance after about 10.5 years. And after 25 years, we come up with a balance in the account of $800,000. Now in this investment scenario, the initial investment is gone. We do not get anything back for our initial investment except for the ongoing cash flows throughout the years. Now let's compare that with an investment in a savings account or government bonds with 25 years duration. As of today, US dollar government bonds from the US government treasury have a yield of about 3.92%. So that can be considered a risk-free yield. And reality these days is that you can get around 4% on a savings account. So that's one of the benchmarks we can use, 4%. We can also assume 5% if you take some kind of risk. So it depends a bit on your personal circumstances. If you have another mortgage you might pay off, you can use that one as a benchmark, or you can be very conservative and take the 30-year treasury rate as a risk-free interest. In this table, we see how the compounding interest impacts the initial investment of $220,000 over the duration of 25 years. So we see with a 4%, which is the risk-free rate these days, it turns into $586,000. And the $360,000 that is close to what we get from our investment based on the assumptions is more like a 2% interest rate. Now that doesn't look too good. The $800,000 that we end up with after 25 years, if we assume an inflation rate of 3%, leave us slightly more than 5%. So all in all, the investment is only a little bit better than putting the money in a bank account in a savings account. So even though the operating profit is around 11% of our initial investment, the actual yield over a period of 25 years is not that great because our initial investment is gone after 25 years, which of course you get back in an investment in a government bond or a savings account. Now let's compare this with an occupancy rate of 85% and an average daily rate of $200. That leaves us an operating profit of $31,000. And with a scenario that takes into account a 3% inflation, we end up with 1.26 million after 25 years. So that is very similar to a 7% return on a bond or savings account. Alternatively, we can also increase the inflation if we believe the inflation is here to stay and will continue to be high in the coming years. So I increase the inflation to 4% and return occupancy and average daily rate to the previous rates of 175 and 75%. So we see with a 4% inflation, we end up with close to 1 million after 25 years. And that compares more to a 6% interest rate. So to sum this up, in order for our investment to be really good, we either need a very good occupancy rate and a very high daily rate, or we need a very high inflation to make this investment better than a government bond. So what is the conclusion of all this analysis? Let's sum it up. The location is good, maybe very good, but not excellent. You need a scooter to get to the beach, to most of the nice places in the area. The object itself is nice. It's not yet finished. In a few months' time it will be finished. But it's a nicely decorated small villa. I would like to stay there. I would like to own it. I maybe even want to live there myself for a while. And I'm sure you can have a nice vacation staying there. Running the numbers was a bit of a surprise and also disappointment to me. The yield is a lot worse than I would have thought. I would have thought that an object like this, with such a high occupancy rate, good rates, and a return of about $2,000 a month on an investment of $270,000, is a very good yield. But actually, it's not necessarily the case. So why is that? I'd say 25 years leasehold period is maybe a bit too short. Comparing with other objects in that area, most of them are 30 years at least, and often they come also with an option to extend. With that, you get the profits a lot longer, and that makes the deal a lot better. Also, the rental revenue for a small 2-bedroom does not seem to be that much higher than for a 1-bedroom. However, the cost of construction, purchasing cost is higher, maybe 20% higher, and that might not be justified. So you're probably better off either looking for a 30-year longer leasehold or for a 1-bedroom and pay somewhat less in the same area. Or the other way to make this a good deal is, of course, if you plan to use it yourself to a significant amount, maybe 2 or even 3 months a year, then the calculation looks a lot better. Instead of paying someone else $180 or $200 per day, you just have $60 a day less revenue. That even gets a tax benefit. So if you stay there a significant amount of time on a regular basis yourself, this can be a very good investment. Let me know what you think about this kind of investment, and would you buy it? Would it be something for you? Let me know in the comments below.